Good morning, traders. It's Friday and the air is electric today. Gold is pushing new highs, yields are holding near critical zones, global policy risks are bubbling, and rotation is reshuffling tiles under us. In the next couple of minutes, we'll pass the overnight, walk through yesterday's tape texture, amplify the macro levers that could snap direction, map rotation flow, and I'm going to lay out 3 fresh trade setups ready to hit at the bell. So then, traders, let's rock and roll. Overnight and futures recap. Firstly, taking a look at our indices. As you can see before the open on Friday, we are red across the board. Asia and Europe, tech is under pressure in some markets, defensives holding, and regional banks are wobbling. Dollar and yields. Dollar has softened modestly, 10-year yields hovering near resistance zone. And then, before we go into gold, just taking a look at the key figures. Nasdaq sitting at $24,657.24. S&P 500 sitting at $6,629. The Russell currently at $2,450. And the Dow $45,952.24. Almost down 1% as we speak. So then, talking about gold, traders, gold pressed towards new record highs around $4,300 an ounce. So we are consistently seeing gold climb higher and higher each and every day at the moment. Talking a little bit about rotation whispers. Big money seems to be shifting edges, less blind growth and more of a safety tilt. Let's recap the tape yesterday and take a look at some more news. So what did yesterday tell us? Well, leaders held support during midday dips. Energy, materials, and cyclical sectors underperformed markedly. Volume in the top names was solid, in laggards muted, and breadth was narrow, strength concentrated, not broad. So our key takeaway then, strength today needs confirmation, not assumption. The tape will demand structure, not flares. Alrighty then, traders. Let's talk a little bit about our macro levers. So these are the wires we pull to see which direction the tape bends. Firstly, yields and rates tension. The 10-year yield is right at the cusp. If yields dip, growth and tech get air. If yields jump, capital rotates into defensives and cash flow names. The real pistol, traders, the slope of the curve. If 2 to 10 steepens again, risk comes alive. Alright, secondly, gold and safe haven flows. As you can see in the news today, it is dominated by gold. Gold's not just bouncing, it's surging. That's telling us many institutional players are hedging amid uncertainty. If gold stays firm while equities are shaky, it signals risk haven. Alright, valuation bubble and global warning voices. The IMF recently warned of rising odds of a disorderly market correction given stretched valuations, trade risks, and debt levels, and global investors are notably tilting toward value and non-US equities as growth names look overbought. Alright, there are still some policy and geopolitical uncertainties that are at play. Tariff threats remain alive. We're not going to get into it though. And lastly, cross-asset synchronized signal. Watch equities versus bonds versus gold versus forex. If gold, bonds, and safe currencies move together in one direction, equities may have to follow. When multiple levers align, the move will snap. If they diverge, expect chop and rotation. Alright, traders. We got 2 more news articles to take a look at, as well as our rotation and flow before we jump into the trade setups. So tech, AI, semis, and equipment. The core still leads, but secondary names are showing early strength behind the scene. The secondary names include equipment, connectivity, and data infra. Alright, defensive, staples, and healthcare. Quiet anchors when the market wobbles. High cash flows, low leverage equals safe landings. Consumer, premium, select, retail. Certain brands with pricing power are being bought quietly even when general discretionary space softens. Cyclicals and industrials. Only strong macro and yield relief can reignite these. Look for volume surge there, not just price spikes. Metals, miners. When gold leads, miners and base metals usually follow, especially if commodity sentiment picks up. Alright, lastly, breadth test. If small and mid caps join early, the move has structural legs. If not, we rotate within themes, not broad trend. Alright, traders, then 3 actionable trade setups going into the open on Friday. The first is Lam Research, ticket symbol LRCX. And this is our equipment or chip infra as discussed in market rotation. So when chip names roll, the infrastructure supporting AI and semiconductor fabs often pick up flow. So action for Lam Research, go long if LRCX opens green with institutional momentum and holds above the pre-market high with VWAP retest. Alright, a fade alternative. If it spikes and fails back under VWAP, then short into weakness. For profits, scale partials early, trail remainder under higher lows. Stop or invalidation below the opening range low or below retest fail. Alright, secondly then traders, McDonald's, ticket symbol MCD. And this is a resilient consumer brand. Why? Well, global demand, currency hedges, less sensitivity, consumer pinch. It's a brand play in shaky times. Action. Enter long on a clean green open, especially if food or consumer staple ETFs are performing. Profit. Clip gains early. Keep a small runner if strength persists. And exit if it fails VWAP and consumer sector softens. Step out fast. Alright, third and lastly is Barrick Gold. Ticker symbol GOLD. Leverage to safety, hedge. So why? With gold leading, a liquid gold miner prices leverage exposure to the safe haven theme. Therefore, action traders. Long if gold opens green and holds or retests support, especially with gold futures firm. Take chunks, miners can move fast. Exit if gold softens or direction reversal, flatten quickly. Okay traders, our execution and tape signals. The first VWAP retest across ESNQ is your discretionary filter. Observe breadth by 10 AM Eastern Time. Wide equals trending, narrow equals sector rotation. Watch liquidity zones, opening range extremes, prior day high low and pre-market pivots. Volume must validate price. Weak volume, strong move. Don't chase unless conviction is clear. Okay, traders, our closing call. Here's your Friday playbook. Yields, gold, valuation, policy. All the levers are primed. LRCX gives you chip infra exposure. MCD offers consumer ballast and gold gives hedge talk. Traders, remember, let's trade structure, not hope. Let the first 30 to 60 minutes tell you who's in control. So, I shop. I'll see you at the bell. Take care now.